Hi guys, and welcome. It's a new year, a brand new trading year, and yeah, I hope we're going to have a better fruitful year, and the signs are there. The signs are there that this year is going to be quite fruitful in terms of volatility. We all know President Trump is back in the office, and that definitely is going to give us a bit of a good movements in the markets, right? So today I'm going to look at the dollar index. We're going to look at the dollar index. It's going to be more of a detailed analysis, and I'm going to start by updating the COT report, looking at what positions might have changed prior to last week's report. So for those of you who are new here, it might be Shonglish, it might be something that you might not be familiar with, but yeah, we do focus on the COT report here quite massively. It gives us further guidance on our directional bias, just to give a certain example, right? But yeah, it's not really like something that we stick to. It gives us a narrative that can help us in understanding the price action that we will be looking at. So yeah, that's what I'm gonna do first. We're gonna have to capture the COT report numbers for DXY, US dollar index, right? So as you can see, I already have data from the 28th of January. 20th of January. So the report that we are capturing right now is from the 4th of February. Now, for those of you who are not familiar with the COT report, so this is a report that is published by the CFTC Commission every Friday at 9:30 our time here in South Africa. 9:30 we have this report published, but the report actually comes out on a Tuesday, the Tuesday prior to the Friday. So the report that I'm capturing right now, is actually from the 4th, last week Tuesday, right? It came out on Friday the 7th, right? So yeah, that's something for you to know. It's actually, for us, it comes a bit I wouldn't say delayed as such, because even if we get it on a Tuesday, we're not really gonna react much to what the data would have told us, right? So with the non-commercials, right, you can see that the non-commercials, they've got 25,203 positions to the upside on DXY. So that's 25,203. Right? So yeah, guys, I do this manually. I'm not even gonna beat about the bush. It helps me in understanding the numbers, right? And this is only once off a week, and I've been doing this chart since 2021, April 2021. So yeah, since April 2021 I've been capturing this data, right? So yeah, it is something which I make use of. So for the short, the non-commercials have got 10,664, right? 10,664. But the main guys that we are concerned about is the commercials, right? The commercials, they've got 9,630 long side, 9,630, and you can see already they've taken profit from 10,484 last week to 9,630. That's a difference of 854, right? So they've taken profit, a bit of profit on their long exposure. That is telling. Okay, that's a sign that we need to see, because the commercials are the ones that we follow through, right? And then on the short side, they're holding like 25,544. 25,544. right? Yo, that's a very slim change. Okay, they are still holding quite a lot on their short exposure. The difference is only 46 from last week's number, right? So you can clearly see the commercials, they are extremely short on dollar index. 72.6% of their net holdings is going to the short positions. Then the other important number we focus on is the open interest, 39,705. That is last week number, right? 39,705. Don't tell me that open interest hasn't changed. Open interest 39,705. Okay. It did change. 39,705. Right, I think I already captured this number. Yes, this number is already captured. 39,705. That's the current open interest. So we've had open interest decreasing at roughly about 3.14%, right? So that's the decrease in open interest. But take note of last week's decrease again in open interest. It decreased from 45,000 to 40,000 plus change, right? That was a 10% decrease. Now, this open interest, it gives us that narrative of understanding where price is and how then do we react. So in most cases, there's like 4 conditions that we look out for, right? When the market is trending, whether it's in an uptrend or a downtrend, there's 2 conditions on either side. 2 conditions on the uptrend and 2 conditions on the downtrend, right? So if prices are in an uptrend and open interest is rising, this is a bullish sign. What does this mean, right? There are shorts that are being stopped out, as in taking either profit or getting stopped out, but the new sellers that are taking their place, right, are not as strong as before, right? As the market continues to rise, the longs get stronger and the shorts get weaker. That is, if prices are in an uptrend and open interest is rising, that is a bullish sign. Then we've got the second condition. If prices are in a downtrend, if the market is in a downtrend, right, and open interest is rising, that is now a bearish sign, right? And then the third condition that we look out for when we're looking at open interest is that if prices are in an uptrend and open interest is falling, right, this is a bearish sign. So we've had open interest drop for the past 3 weeks from 45,714 to 39,705, right? If prices are in an uptrend and open interest is falling, this is a bearish sign. Take note. And then the last one is if prices are in a downtrend and open interest is falling, this is a bullish sign. So these 4 conditions here, these 4 criteria, we use these in relation to open interest when market is trending. There's other conditions that we use when market is consolidating, but we're not going to go through that in this forecast here that we're doing on dollar index. So be that as it may, take note of the decrease in open interest for the past 3 weeks and how the commercials have been taking profit for the past 3 weeks, but marginally taking profit on their short exposure. You see, marginally taking profit on their short exposure. Now that's number 1. So fundamentally speaking, right, the narrative that we are reading from this number is that the commercials are favoring more to the downside. They are favoring more a weaker dollar, right? But that does not mean that dollar is going to be weak. You see, understand that part. It does not mean that dollar is going to be weak, right? So that's number 1. Number 2, we come to our long-term interest rates, right? The long-term interest rates triads, right? This is before I even go to the dollar, guys. You see, I have to understand what the fundamentals are telling me in regards to dollar. Yes, there's another factor to be considered, the tariffs by Trump, right? That's another factor. But for now, we're going to look at the long-term trials, right? And you can see here, this is the 10-year treasury yields. Price has traded away from a monthly bearish order block right here. You see, that's our monthly bearish order block, right? And price is trading away, is finding resistance inside a monthly bearish order block. But the main thing that you need to take note of is SMT divergence using smart money tool to see if the institutions are pouring in money on the long-term rates, or they are taking out money out of the long-term rates. And to do that, we need the other two long-term rates, right? So we've got the 10-year, right? So I'm gonna put the 5-year. Okay, the 10-year is gonna be the one in the middle. And then on our extreme right, I'm going to put the 30-year, right? So that's the 30-year, and then the first one I'm going to put the 5-year treasury, right? There we go, right? So what we need to see here is basically institutional sponsorship in the long-term rates, right? Institutional sponsorship in the long-term rate. Now the good thing with investing.com is it gives you that ability of having to maneuver these charts here, and price corresponds to each and every one of the highs or the lows that you are marking, right? Let me just hide these marks here, right? So we can see here on the 5-year, we've got this corresponding high, lower high to another lower high, right? Price did not make a significant high move, but the corresponding one on the 10-year, you see the difference. This is what I would like you guys to focus on. Understand if smart money is involved. So you can clearly see on the 10-year and the 30-year, right, we have had price trade above a previous old high, close below, and then we pushed lower. Same applies on the 10-year, trade above, close below, push lower. While price was in premium, what premium asset area are we talking about here? Bearish order block, right? Same applies on the 30-year. We've got this monthly bearish order block, right? Meaning we are favoring more to the downside, right? But when you look at the 5-year, where it failed to create a new high, right? Sort of. Price is also finding resistance, but inside a monthly bearish order block, but we couldn't make a high. That is, if we go to a lower time frame on the 5-year yield, you can see price will be back in premium for shorting opportunities. This is what we need to see. This is the ideal setups for having clear trade setups on our currency pairs, right? So what does this info tell us, right? The fact that the 5-year failed to trade higher at the same time that the 10-year and the 30-year created new short-term highs, right? Basically we can interpret that as the 10 and the 30-year were running buy side liquidity for a push to the downside, engineering short liquidity, and you can see our price has moved lower, right, on the 3 assets. The 5-year was only returning to fair value, right, for a move to the downside. Now remember, you have to do this with the correlated assets, right? Your macro perspective, understanding your macro perspective of the charts, where you have the benchmark and where you have the underlying, right? So manipulation in the benchmark and price moving in the opposite direction on the other asset, right? So this is implementing macro analysis, guys. This is implementing macro analysis where you have smart money distributing for sell models, manipulation in underlying versus the benchmark. So with correlated assets, right, the benchmark should be making higher high, underlying makes a lower high. That is exactly what we have. So you've got your benchmark as the 30-year and the 10-year. The 5-year is only creating a higher low. That's smart money distributing for sell model. So when we see this now, by the time we come to dollar index, we already have a narrative of a weaker dollar. Now take note, guys, I'm only gonna do dollar index in this weekly forecast because I feel like it's gonna give you guys more emphasis to do your own analysis on the other major currencies, because if I cover dollar index, it becomes easy for you to analyze and come up with trade ideas on assets like the majors, Euro USD, Pound USD, and the rest, right? So yeah, we're only going to be looking at dollar index, right? So with all that info that I have gathered, right, yeah, it might seem long now because I'm going further and further describing what I'm looking at and explaining so that you guys understand, but this is like a 5-minute process, right? So with that in mind, now I'll come to dollar index. Then I have to look at my market profile, right? 9 to 18 month profile. What is it that I see in terms of my premium and discount area? We've got this gap here, right? But now when we look at this gap here, I'll only look at it from this candle's high, right? You see this candle's high, because that's where premium is, right? So you can see there we've got our fair value gap, right, which is still providing resistance in terms of price. So that's a premium area, right? And then prior to that, we had market expand to the upside. You see, there was a huge expansion to the upside in terms of our market structure, and price is now finding a bit of a resistance. It's trying to move lower, right? Now this is happening at a time when the long-term rates are struggling to push to the upside. So basically we've got a downtrend probably starting right now on the dollar index. So I'm going to be favoring shorts. I'm going to be favoring a weaker dollar. As much as Trump is dishing out tariffs left, right, and center, I believe that dollar might have reached a ceiling at this moment in time, and we are now looking for a possibility of returning to levels like the 105, right? You see, the 105 levels, right? We now have a possibility of price returning to these imbalances here. This becomes the draw on liquidity, looking for a move to the downside during the first quarter. We're already in the mid of the first quarter, so we're talking of the rest of the first quarter and the second quarter. I'm anticipating a weaker dollar. Take note, anticipating a weaker dollar, right? Meaning I'm going to be reactionary to what's happening, right? If the data coming out of the United States keeps supporting further moves to the upside on dollar, then there's no reason for me to short. I have to trade alongside what the data is talking about. Like for instance, we've got CPI tomorrow. That's going to be crucial for the Fed, right? We've got CPI tomorrow, and then if we look at the calendar for the rest of the week, we also have PPI, if I'm not mistaken. So Tuesday we've got no Tuesday. We've got Powell speaking at 5 p.m. That's pretty much about it for Tuesday. And then Wednesday, that's when we have CPI. Core CPI for year-on-year focus is 2.9, meaning market is not expecting any change. That could be bearish. And then after that, we've got Powell again at 5 p.m. And then on Thursday, I mean, we do have PPI, you see, Producer Price Index. That's crucial in terms of inflation, that fundamental. So we have to wait and see, right? But from everything that I've done, I'm looking for a weaker dollar, right? I'm expecting dollar to be weak. It's going to be offering, I think, better opportunities for sell models, right? Sell models are ideal for me on dollar index. So this is the monthly, right? We have had a run of stop inside the previous month high, traded above December high, ran and closed below. We have pushed to the downside marginally beginning of February, the last week of February. The first week of February, we've had a move to the downside, right? So I expect February to continue bearish as the month progresses. I'm expecting bearish momentum to build up on dollar index, targeting 105 price point. And ultimately for the year, I think we should reach, we should trade probably lower than 103, right? So we're talking of these levels here, right? We're talking of these price points. So the two favorably gaps to the downside, those are your draw on liquidity, expecting price to be drawn to these levels, and that means your targets for your shorts, right? Those are your target for shorting opportunities, right? So we're gonna go to the weekly chart, right? And on the weekly chart now, I'm just going to be defining now. Okay, let's not forget we are currently in our premium array favorably gap, right? And we've got this high here from the previous month, right there. We don't want to see price trade above that, right? If it happens that price is traded above that level, 110.180, if it happens that we have traded above that, then we are actually looking for a strong dollar, because we have had a clear reversal pattern for shorting opportunities now on DXY. The fact that this candle struggled to trade above, that's quite telling in terms of our market structure. So you can see here we dropped, we filled up this imbalance here, right here, we filled up this imbalance, and price has found a bit of momentum to the upside. The bulls have pushed price to the upside a bit, but it's not really a sustained push to the upside. So I'm expecting, especially this current weekly candle here, this current weekly candle, I expect it to close bearish. Let's just take note of that, guys. This current candle, I expect it to close bearish, meaning my weekly targets are, number one, we're looking at 106.970, right? 106.970 price level. Let me put my price level there, right? So that's my target number one. And then target number two, we're looking at this level here, right there, 105.420. But that's like 2 weeks, 3 weeks target. For this week, I think 106.92. 106.92. Let me just mark that properly. 106.92. That's my target for shorting opportunities. But where would I have shorted from, right? Anywhere inside the gray shaded area, as long as I have a premium array to focus on. So for instance, we're talking of this old low here, right? that old low coming in at I'm just gonna give a rough number here, guys. 108.59. So basically 108.60. That is an ideal area for shorting opportunities. Remember, we are inside our monthly fair value gap. Yes, it has been filled, but price will still be finding resistance inside that area, right? So those are the targets, right? To the downside, I've got my targets as in take profit, and to the upside, I've got my entry level, right? If we go to the daily chart now, right, on the daily, right, you can see where the 108 price point is. It's right here, and this low candle, price trades above, comes and close below. So we should expect price to trade to that level, 108.60, before a move lower. So expecting price to push to this level before we target the down side, right, which is 106.920. So that's me being bearish on DXY. So there's going to be times when price might extend the rally. You see, we've got this daily bearish order block. You see, this D1 OB, right, bearish OB. There's times when if price does keep pushing to the upside, then I'm looking for this level here is a potential level for price to find resistance before we make a run for 106.920. So 106.920 is my weekly target, and this is all dependent on how Powell is going to testify, the CPI number that we're going to get on Wednesday, and the PPI number that is going to come out on Thursday. So I do believe that those fundamentals can support dollar to make a decline towards 106.920. Price may not actually reach for 106.920, but those are the levels where you should also anticipate. Do your own analysis and see how you are going to fare out against what I would have just said. I'm not saying what I'm discussing here is the holy grail, but I'm just sharing with you guys like how I'm going to approach the week. So when you go to the H4 chart, right, so see here the 108.60, right, 108.60, ideal scenario for shorting opportunities, or the 109.16. See, I'll be expecting price to find some bit of resistance there before an expansion to the downside. So yeah, that's pretty much about it, guys, regarding the first weekly forecast of the year. And with this in mind, now you can clearly see that I'll be supporting, say, bullish or buy models on Euro USD, Pound USD, and also NZD USD and AUD USD, and then shorting opportunities on USD CAD, USD CHF, and USD JPY. So bullish on Euro USD and the rest, and then shorts on USD CAD and the rest of the crew, right? So yeah, that's pretty much about it. It's a rough pitch, it's a rough approach, but I'm sure you can get some bit of insights on how you can approach the markets. So yeah, that's pretty much about it, folks, and I wish you nothing but the best and good luck in your trading. Thank you.